Agricultural Economics 4. Introduction. Farm accounts are written farm records of all the financial transactions in the farm, which evaluates its performances. Financial documents. A financial document is a record in form of written piece of paper or electronic form of record giving information of expenses, assets or monetary status of a farm. They include the following: invoice, delivery note, statement of account, and purchase order. Invoice. An invoice is a financial document used when goods are delivered on credit. It is used to inform the buyer of the goods delivered on credit. An invoice contains several types of information. For example, particulars column, quantity column, name of the seller, name of the buyer, price per unit column, and amount column. In addition, it also provides discount, if any, terms of payment, and payment period. Receipt. A receipt is issued when payment of goods delivered or services rendered are made. It shows that payment has been made. Delivery note. Delivery note is a financial document written by a seller that accompanies goods on delivery. It helps the buyer to check if all goods have been delivered. The delivery note shows that goods have been physically delivered from the buyer. Purchase order. Purchase order is a financial document written by a buyer when requesting a business firm to supply specified goods. Statement of account. Statement of account is a financial document sent by a seller to a buyer who has bought goods on credit over a period of time, that is, specified trading period. It is a reminder to inform the buyer how much he owes the seller. Books of account. These are books into which information on various business transactions are recorded over a long period of time. They are also called financial books. The financial books used in the firm include cash book. A cash book is a book where transactions involving the receiving and paying out of cash are recorded. A cash book is divided into two main sides, namely sales and receipts side and purchase and expenditure side. Each side of a cash book has the following columns: date column, when the transaction was made; particulars column, which describes the transaction being carried out, specifying the items sold; amounts column, which indicate the total money paid or received in each transaction. On the sales and receipts side, purchase and expenses must balance by carrying down the balance either from the sales and receipts side or purchase and expenditure side. Inventory book is the financial book where all the assets owned by the farm business or an individual are entered. Inventories are drawn at the end of an accounting period. The inventory records are divided into the ledger. This is the principal book used in keeping financial records. It contains all the details of all items in the business owed by a farmer. It has two sides, the debit and the credit side. Both the sides have the following details: date, this shows the data in which transaction took place. Particulars column is a short description of the cause of entry and name of other accounts affected by the same transaction. Amount, the amount of money by which the amount is increased or decreased. Journal, it is a book of account of original entry where all transactions are recorded from day to day. Journal contains all unclassified transactions. It is also called the book of prime entry, that is, transactions are made prior to their entry in the ledger. A journal has the following details: date of transaction, shows the date in which the transaction took place. Name of the account to be debited shows a decreased transaction. Name of the account to be credited shows an increased transaction. Transaction particulars, brief description of the cause of entry. Amount of money involved, money by which an account is increased or decreased. Financial statements. These are statements which show various financial transactions on the firm. They include the following: balance sheet, profit and account and cash analysis.